following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You got great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow down 58, NASDAQ off 47, S&P's down 10, gold contract down $2.20, traded at $1,095 an ounce. Silver down 5 cents, $13.86 an ounce. Platinum down 35 bucks. That baby's getting hit. We'll have to run over to that market at $8.44 an ounce. Copper down 5 pennies under the $2 level. We're at $1.96 a pound. Light sweet crude down $1.87, $31.29. Now, light sweet crude, folks, is confirmed ABC structure on the way down. You get a $28 price projection. Pretty intense. It has been getting whacked in a big way out here today, no doubt. The bond market, 10-year down 2 ticks, 127.11, 30 off 19, 155.25. Bonds continue to basically reject higher price. Bottom line is that even with the market getting toasted, roasted the last 4 or 5 days, what bonds did do, they spiked higher on Friday. Last night, intra-night, they actually spiked higher. Then they gave it up on price and volume. Bonds want lower price. King dollar up 196 ticks at 98.79. The euro is down 5 ticks at 108, and the yen is trading at 117.52. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay. So if we take a look at the SPY, what you have, the SPY right now is trading out at 190.79. We have 127 million shares traded thus far. Friday, we did 200 million, 209. Thursday, 213. What we're doing is that we're coming into the downdraft that was out here from, and this is the high, August 24th, folks, is a high volume spike downdraft. That's going to get tested. That's 182. I do not expect that to get tested right now. But as we go through the show, I'm going to show you that some of these stocks have already not only got down there, they've taken that area out, which is an absolute mind blower, because on that day, there were only a few equities that actually traded at those lows. The market fell apart, spiked down there, came back up. Bottom line, the equities are down there. That being said, what I expect you're going to see as we come into this close out here, you're going to see more than likely a little bit of strength. The market has had high volatility, as it has last week. The SPY got down to 189.82. That was at about 10 minutes of 1. It started rejecting lower price. You know, we'll see where this shakes out coming into the close, but what I do expect, you're going to get a little pumping in here of equities catching a bid to the top side. We'll see if it shakes out like that. The NDX 100, 3 Qs, same type of setup inside the 3 Qs. What we haven't got yet in any of the indices, you know, you've got a couple big downticks. We got an additional one today. We haven't got rejection of lower price. You know, the Qs right now are trading, had got down to 102.73. We're at 103.28 right now. Rejection of price would be the Qs have to actually get up into 103.90. So that'd be quite a run if in fact it can do it. Doesn't mean, in this market, yeah, it can be done. Gold contract. What do we have with gold? Bottom line, gold contract, you get sideways moves. The correlation and the difference between gold and silver is pretty amazing. Gold has caught a bid, continues to catch a bid. Right now, it is going sideways, has 182,000 contracts. We went higher on Friday with 193,000. We went higher on Thursday with 217,000. The way gold has set up, it looks like gold wants to run to this 1192 area. Now, that being said, the problem child out here is silver, and silver in a large way. If we go take a look at the silver contract, we take silver, we take a look at silver. Silver right now is pushing lows, and you have some volume behind this move. No, actually, it's light volume. Yeah, it's okay. So we have 38,000 contracts. Last Thursday we did 68,000 on the way up. Friday it gave it up and came back with 52,000, and we get 38 now, which is not bad, but it has not rejected lower price. That is saying that we're at 1385. It's saying, hey, 1381 can get tested. Those swing lows down there have. It would need a lot more volume to take it out with a volume. We're running about 48,000 to 50,000 contracts down at those lower levels. We go over and we take a look at the bond market. So bonds out here, watch how this is shaking out. Now this is the 10-year bond. What it's done is this. We're flat right now on the 10-year for the day. We got to a price point on Friday, and Friday it had some volume behind the move. Friday, you got to 127.18, and you did 1.6 million contracts. What we did today is that you got to 127.23, so you got over that level. We're at 127.11 right now, and anything, this is where this is going to be wild. One tick's making a difference. You close under 127.10, that'll be another failure on price, failure on volume inside the bond market, which is pretty wild, folks, in the context of how fast the S&Ps have gone south. We go up and we take a look at the 30-year bond. What we have with the 30-year, this is what you have inside the 30-year. 30-year. 30-year bond got to a price point today of 157.03. Right now we're at 155.31. We got over all the highs. We didn't make it to the high of, let's see, 157. Yeah, we didn't make it to the last high, swing high, which was on the 11th of December. We got over the highs of Thursday and Friday. We're under them right now. That's saying that bonds also, number one, have failed at a high. Number two, want to come down to 152.24. And we'll see if, in fact, that is the test of the high inside that bond market. Dow Industrials right now are down 70. You get the NASDAQ off 51. S&Ps are down 11.5. Gold contract, 1,096. Silver's 1,385. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 86. You get the Nasdaq off 57. S&Ps are down 13. Inside the Dow Industrials, the strength versus the weakness. The strength, you have Cisco, that is up 1%, 24 cents. Intel is up 29 cents. Big Blue, which is a dog, is up 79 cents. And Apple is up 54 cents. Taken away from it, on the way down, you get DuPont down 4%. That's down 247 at 58.70. You got Caterpillar off 3.5%, down 222 at 61.05. Chevron is down 2.5% at down 225 at 79, and ExxonMobil 2.5% at down 183 at 72.88. Now, if we go over and we take a look at these big oils, they're setting up. They're setting up pretty good, folks. Okay, when big oil came off the low, the 24th of August, we're at $66. Runs from $66 up to 87. We're at 72. Pulls back from 87. Now we're at 72. You're taking out the swing point today. The swing point is 73.79. And you're going to take this out. You know, if you've been following this, this is pretty cool because we're taking this out with light volume. And that's what you want to do if you're going to set up that. You want to be basically looking to see how it comes into the $71.36, which was the high of the low on the 24th. So it's doing the correct thing. You know, we'll see how it sets up when it's down at that 71.36. And it's certainly hard to believe that these oil stocks can move this much, too. I mean, it's just pretty amazing, actually. CVX, what I mean by moving that much is that, you know, you have multi-billion-dollar stocks that market cap-wise, you know, have moved, like Chevron moved from $69 up to 98, and now it's at 79. Also, now watch the difference. Now, okay, so ExxonMobil's the one that's setting up for a buy, and this is why. What Chevron's done, Chevron took out its swing point. However, when it took out the swing point of $84.25, it took it out with volume. We took it out with 15 million versus 13.3. Now, the volume is lighting up a little today, but that is an indication that that ExxonMobil is going to be the better buy inside of that. Why? Less sellers coming down to it. And it is also, we'll see if, in fact, it does reject lower price, but that is most of the time you take out a swing point, if you're looking for a buy, you had the strength coming off the bottom, 20 bucks. You pull back, you take out the swing point to do it with lighter volume, you get into that low, no one wants it again, bottom line, that's where you get the rejection of price. The bond market, folks, is just amazing. It just is just, you know, I'm going to pull up this 30-year again because this is just screaming. It is screaming. If you're going to refinance, you're going to get a mortgage, you're going to get all the above, folks, go get it. You know, I don't see bonds going really high, but guess what? My take is that the highs are in. You know, because what you have here, even with the 30-year bond today, it's like, okay, the market can't hold price. Bonds can't, the 30-year can't get to the high that was generated on the 11th. What we did do is this. We went to 157.03. Now, that's a dynamite run, folks, and this is why. The close of the high in bonds, we're talking going all the way back to 1981, is 156.09. No, 157.10 rather, 157.10. Well, we made it to 157.03. Can't handle it. Right now, you're at 155.28. From the high that was generated October 2nd, thus far, you have that high, and then we made it a lower high on October 14th. You made a lower high on December 11th. You made a lower high on December 14th. Now, we just made a lower high on, well, today, if in fact we are where we are. The correlation is not just that you have made these lower highs. The correlation that you want to wrap your head around is that this market was going south in an incredible way, and each and every time the market went south, you would get huge amounts of money piling into bonds. We didn't get it. We didn't get it. That, to me, sets up that, guess what, the bond market wants to pull back. You know, we'll see what kind of a pullback that it generates. The XAU and the HUI. Let's go take a look at the XAU and the HUI. XAU is down $2.92 today, giving back quite a bit. That being said, what the XAU and the HUI had done, and we'll see where the volume comes in tomorrow morning. Oh, actually, I get it about 8 o'clock tonight, but you know, we're off the air by then, of course. What the XAU had done is this. Friday, you got to $48, Thursday rather. You got to $48.98. Last swing point, which was generated on December 2nd, 4th rather, was $49. You went into that with volume increasing. As long as the volume is contracting as we're pulling back today, that's saying that we're going to get to higher price. The Gold Bugs Index, bottom line, took out its swing high and took it out with volume. Took it out with volume on the daily, took it out in volume on the weekly. That is also an indication that it's going to go to higher price. The Gold Bugs Index today is back $5.06. You're trading at 113.48. Bottom line, we had already broken the 121.51 area. That Gold Bugs Index wants to run up to this 139 area. So you can expect the volatility is going to continue out here. What is going to get intriguing in the aspect of the dollar is this, and the dollar index. You know, a few years ago, what you had is that we were talking about the amount of dollar bonds that were issued across the world. They were breaking records as the amount of dollar bonds that were issued. And what that was all about, folks, is that everyone thought the dollar was going to continue to go to hell in handbag, and of course the dollar had already reached its low in 2009. It's gone up since then. Well, what ended up happening is that all these emerging market corporations, they issued dollar bonds. What ends up happening with dollar bonds? A lot of these companies basically are having a hard time paying back any of the interest, because what ended up happening is that they got to pay interest back in dollars. Their currency has lost 30-35%. What does that do? That takes an interest rate that might have been at 7% and bangs it up to 21-25%. Big problems. Well, this morning, now we get just the opposite thing that's taking place. General Mills this morning is pushing out $500 million in euro debt. So when this came across the tape this morning, I said, oh, this is going to be a trip. So now these companies rather, are going to be pushing out euro debt right when, you know, my take is that The bottom line is that good old King Dollar, folks, we pulled this up, also is having a hard time getting through the downdraft that was created out here on December 3rd. The last time it came up here was last week. It failed on price, failed on volume. This morning it's flat, but my take is that bottom line dollar index wants to go lower. Euro wants to go higher, which I know is insane, right? Fundamentally, it seems insane. But guess what? Nothing goes down forever and nothing goes up forever. That's the way that seems to be set up at this point. Dow Industrials, volatility, baby. You got it in spades. It's a beautiful thing. Dow right now is down 3. Nasdaq's off 27. S&Ps are down 3. You're going to see this whole market go positive, folks. You get 33 minutes left. You stay right there, folks, because nice volatile market like this. We have our man, Mr. Chris Gaffney, coming up, the president of Everbank World Markets. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 48. Nasdaq is down 9. S&Ps are up 350. You want volatility, folks? We have it in spades. And right now we have our man, Mr. Chris Gaffney, the president of Everbank World Markets. Now, folks, you can come over to everbank.com. Go to everbank.com because we're going to walk you through, as you're at everbank.com, we're going to bring you into the aspect of the foreign currency accounts. Chris Gaffney, welcome back to TFNN.
It's always a pleasure. And another, you said it, a volatile start to 2016, isn't it?
Isn't it amazing, man? It's just, you know, Chris, this morning, my son and I, we do a 10 o'clock in the morning show. And, you know, we had folks calling in. You know, of course, we get a lot of people that, you know, in the gold market and the currency market in general. And we were talking about the Rand dollar and the Canadian dollar. And, you know, the aspect, the weakness in those currencies are pretty amazing. And what ended up happening is that I saw General Mills, they're going to float a euro bond. And I was looking back, I said, this is amazing. You know, a couple of years ago, everyone in Europe were floating dollar bonds. Now they're getting toasted on, you know, because, of course, that went down. And I said, what a great time to talk about the different currency accounts that EverBank has and how they work.
Absolutely. Well, with the commodity hit that the commodity currencies have taken, the dollar's been strong. We're coming off of about 4 years of dollar strength, 3 to 4 years of dollar strength, and the question is, it could get stronger still, but we're approaching those levels where you start thinking something's got to change, something's got to give, and the accounts that we developed here at EverBank really give individual investors the opportunity to invest into the foreign currencies through an FDIC-insured instrument. The FDIC insures against bank failure. So, you're getting into the foreign currencies. Now, they are going to fluctuate up and down with value, but you're doing it in an FDIC-insured bank account.
Which is really cool, because, of course, that is crucial to understand, that basically it's insured. Can you walk us through, so we have a huge amount of Canadian listeners, of course, right? And what has happened there, I mean, it's pretty amazing, just inside the Canadian dollar, whether folks are coming to the United States. What we were talking about this morning is that, hey, listen, it would be a decent time maybe next summer to go take a safari to South Africa, right? Now, do you guys have Rand accounts too?
Yeah, we sure do. We have South African Rand accounts. Wow. It's one of our most popular basket CDs. Combines Canada, South Africa, Australia, and New Zealand.
I see.
It's called the Commodity Basket.
Okay.
And, you talk about some downtrodden currencies. Between the commodities, or we have another one called the BRICS basket, which of course is Brazil, Russia, India, China, and South Africa. And again, those baskets are down dramatically. So if you're looking for something that, maybe has some value as a potential upside, you could look at some of those, kind of a contrarian play, but more of a value play really at this point.
That's what it seems like. And, we were talking the aspect, let's say that you're taking a vacation and you're going to go spend 10 or 20 grand. Maybe they'll get weaker, but it's a great way to lock it in that you know what your vacation costs, right?
Why not do it now? And take advantage of the cheaper currency right now. And we certainly one of the only places in the country that will allow, one of the only banks in the country that will allow you to do that.
Well, what's so cool is that, just as you said, for the retail investor, I mean, I guess, if you have millions, yeah, you can open an account like this. When you don't, the bottom line is that, it's not available to people, which is just pretty wild.
It's really, yeah, and institutional investors, as you suggest, have done this for a long time. And of course, corporate FX is the biggest market, the most liquid market there is. And,
yes.
But individual investors usually were limited to, doing the spot contracts or highly leveraged accounts. And this gives them an opportunity to do it in a bank account that's not leveraged and really is just a pure currency play.
No doubt. Now, can I switch gears on you for a second?
Of course.
And what I'd like to do is, if we can switch gears into the precious metals in general. I mean, we still get metals running out at gold's at 1040. We get silver at for 1385. So if folks, can you just talk about the couple different accounts that you have, the unallocated metals accounts there, plus that you can actually just buy gold, silver, platinum, and palladium?
Yeah, the metals finally have caught a bid. Boy.
Yes, gold caught a nice bid, yeah.
Yeah, and in the first 2 weeks, I mean, the increased volatility, we've seen some safe haven buying. What our accounts allow clients to do is to buy those precious metals with at a $5,000 investment.
Yes.
And hold it in a cash type of account.
Okay.
Very liquid. Again, you can invest a dollar amount, partial ounces, and you can also always, if you want to take delivery, convert it to 100 bars, take delivery.
How cool is that? And folks, you can give Everbank a call at 855-750-4051, or you can visit everbank.com/TFNN, and you're going to see the variety of not only the different currencies that you can just, and the currencies that you open up, it's just like a regular bank account, folks, okay? The bottom line is, though, you have basically either a hedge that, you think that those currencies are going to go higher because they've got killed so dramatically, or you have a student that's going to school in Europe, in South America, in Asia, all of the above. And of course, then if you want some insurance policy, and we're talking about whether it's gold bars, silver bars, or those unallocated accounts, it's a very inexpensive way that you're not trading in and out, because the bottom line is that the currency markets are not for the meek, that's for sure.
Exactly.
Yeah, totally. Well, listen, Chris, it's always a pleasure. Happy New Year. We're going to make it a great one out here. And needless to say, we know that the volatility's out there, and it's nice to know that, you can open these investment accounts, the currency accounts, and they are FDIC insured. It's a huge deal, man, because I think, people just want to make sure that their money's safe, and they you can take less risk, but you're going to get something back, right?
Right, and finally, just reminder that we still have that yield pledge on our U.S. dollar accounts, too. So even if you want to stick with the dollars, we're a great place to park U.S. dollars. We have a bonus rate and a yield pledge to keep our yields high.
Oh, that's awesome, man. Okay, I will run over the audience with that for sure, man. I will absolutely. That's a great deal, man. And
all right.
You just go to TFNN.com, folks. Go to everbank.com/TFNN. You have a great day. Have a safe day. And, of course, look forward to having you back on, Chris.
Happy New Year. Thanks.
Thanks so much. Okay. You stay right there, folks. We're coming back, and we talk about a bounce. You get a bounce and a half out here, folks. The Dow's up 81. The NASDAQ is up 2.5. NASDAQ's up 7.5. No, NASDAQ's up 2.5, and the S&Ps are up 7.5. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is, let's see where we're at. We got a heck of a bounce here. So the Dow is up 87, the NASDAQ is up 6, S&Ps are up 8.5. And bonds, they go, those are the bonds. You get the 10-year down 5 ticks, the 30 off 24 ticks. We go take a look at those S&Ps for a second. What we have inside the S&Ps right now. Yeah, we just ran, you talk about a bounce, man. This is a trip. So we just ran from, see, the first, that first downdraft at 150. That was the low that was established. That was 1892. When we just come on the air, they were pushing it down to the 1897 mark, and then we just ran from 1897. We just ran 21 S&P points, and it looks to me like it's going to run right into the close. So check this out. This is pretty amazing. $19.29. From this morning has volume. This thing can basically, has plenty of time. We're talking 20 minutes. Yeah, that's 15 minutes. That is plenty of time to get up to that number and actually take it out, which would be a total mind blower. We go over it and we take a look at the Dow Industrials. The Dow ran from 346 to 432. So that's been, that's quite a run. There's no doubt about that. That one there. Yeah, this is running over its high. So S&Ps could do the same thing. The high this morning, the opening high was 16,358. No. All right. Yeah, it opened at 358. Then it ran to 461. Right now we're at 445. It's gonna run back up into those numbers. That's the way this is shaking out right now. We go into the NQs, the Nasdaq NDX 100. That right now is at 4289, and we take a look at this. Okay, so right now the high of the day was on the open this morning. That was 4304. You're at 4290 right now. That also can get up and over that number. There's going to be. You'll get a bounce going here. And if we take a look at so now what you're going to have is this. Now, as we come into the close, you have the down ticks that you needed to get a close. Now what you're also going to have is that you're going to have a rejection of price. If we look at the SPY, the SPY hit a low of 189. That basically more than likely, that baby can now bounce up to 199, and we're at 192. 199 to approximately 202 is the number there. We go look at the NDX 100, the 3 Qs. What do you have inside the 3 Qs? The 3 Qs got down to 102.73. That can bounce up to the 109.38 to 109.48. You know, so I suspect what you're gonna see here. You're gonna let's go to the small caps. We take a look at the small caps. IWM out here. Now this is what's cool about the small caps, folks. Is that the small caps already took out the August 24th low. That was 108. We're at 103. That's problematic in a huge way. The small caps, I don't think we'll get up to the 110. The small caps will more than likely trying to get back into the 108.26. So that's going to be watching that level there is going to be crucial. Why? Because I suspect what you're going to see out here now is that you're going to set up a B to a C of an ABC structure on the way down, and the correlation will go like this. If in fact that's what we're doing, you're going to see as the bounce starts up tomorrow, the next day, you're going to see volume contract each and every day. If you see volume contract every day, that's the B to a C of an ABC structure on the way down, and what you'll get off of that is that bottom line. You know, you're going to want to be fast, nimble, and you want to be selling that baby away. We go take a look at the, let's go over to that bond again, because the correlation these bonds, the 10-year right now, we're at 127.08. That wants to make its way down to the low of the day, which was the 127.02. We'll see whether it gets there before the close, and let's go see what good old King Dollar is going to do. You know, and the amazing part about this too, by the way, folks, someone just mentioned China, and what is amazing is that it's amazing that we were even up this morning, up now in the context that China got absolutely toasted again last night. You had the Shanghai down 5.3%. You had Hang Seng down 2.7%. And if we do take a look at the Shanghai out here, let's see. This little baby, let's get that volume in there. Okay, so the Shanghai is coming into the August 26th level, where that had 46 billion shares, and last night we went into that with 27 billion. Prior night, 25 billion. Now, the Shanghai hasn't had a rejection of lower price yet. What you can see, though, as you're going into that level, what it has had is that it has had huge contraction of volume. And as one of our tigers is saying inside the den yet, we did not get a high arms reading. So what you have is this. When I talk about you get the large tick reading, you get the rejection of price, that's only short-term bounce, folks. If you had a longer-term bottom in, what we would get is you get the arms readings, you get the tick readings, and more than most of the time you get a longer downdraft than we have. 5, 6, 7 days. That's a good downdraft, but that's not a monster downdraft by any means. You know, now because we haven't got downdrafts in the last 5 years, you know, folks think that okay, that's a big downdraft. You start looking at some of these equities that have broken the August 24th low, and you'll see what big downdrafts start to look like, and they're pretty intense. You go over to the transports. The transports are broken down. They're down another $34. These babies, you know, the transports took out August. Yeah, they took out August last week. Yeah, August 24th. The transports right now are 69.11. And those babies want to run down to 52.37, and the high was 93. So picture that. The high was 93. You're at 69, and it looks like, hey, I mean, that can get down to 52 like nothing, you know. So let me tell you the CSXS. I'll pull up some of these trains so you can see. Okay, so see, this is an indication. CSX, Monster Railroad, right? The swing low was $24.47 on the 24th of August. The stock bounces all the way up to $30. So it's up $6, or almost got 17%, right? And now it's broken that low. It's off a high of 37. You're at 23. And this thing can't hold price, man. This thing's going a lot lower. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. Dow Industrials right now are up 73. Nasdaq is up 6. Nasdaq is flat. S&Ps are up 6. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now up 79. The Nasdaq's up 3. S&Ps are up 8.5. And as you come over to our website at TFNN, folks, on the right-hand side, you're going to see the Everbank banner. You can hit that banner, and what is going to come up is that we put the money in the money market for you. I'm Mr. Chris Gaffney. We're ending the call. What he was talking about is the special yield pledge money market offer. Now, this offer you can still get over at Everbank, and what the offer is that you get up to $500 when you open a yield pledge money market account. The Everbank themselves will add between $10,000 and $24,500, adds 25% rather. After a certain point of time, if you deposit more than between $25,000 and $50,000, it's $50. Between $50,000 and $75,000, it's $100. Now, this is a regular money market account. It is guaranteed to have the top 5% yield in the country. You can move the money 6 times a month. They have mobile check deposits, no monthly fees. So if you're looking to park some cash to get a good yield. The current yield that they're looking at right now is 1.11 first-year APY for new account holders, up to a balance of 150K. So bottom line, this goes up to 150K. But check it out on the front page of TFNN. You hit Everbank. You hit the Everbank banner, or you can just give them a call at 855-750-4051. Volatility out here. You can expect this volatility to continue inside this market. And what I do expect that you have out here, though, is that you get yourself a little bounce out here. And this bounce, the cool thing is going to be here, folks, okay, is the aspect of markets around the world have come down. They've come down fast, furious, all of the above. They're going to start bouncing. The harmony inside these markets, meaning if our market goes up on light volume, if these other markets go up in light volume, which we'll show you, we'll show you whether they go up in volume or not volume, that the higher the probability, meaning that if all these markets go up on light volume, they're all setting ABC structures down as they bounce. That's crucial to wrap your head around. Don't forget, our man, Mr. John Logan, kicks us off 8 o'clock in the morning. He goes over all these markets every trading day. So no matter where you are in the world right now, you can get them right on your cell phone. TFNN.mobi gets the audio. You get Tiger TV. Just go to TFNN.com. Hit it on the right-hand side. As you get ready for the markets, bottom line is that you'll get some good feedback as to where these levels are, not only just in our markets, but in markets across the world. The good old King Dollar still holding tight. It's up about 300 ticks. We'll see whether it can hang in there the rest of the night. Last Wednesday it failed. Came down, and then what it did on Thursday, which is subtle, but we had volume as we went from 99.38 to 98.24. You know, we had come down on 39,000 contracts, and we're going up today on 31. So that's still setting up for lower price, which is deviant, by the way. There's no doubt about that. It's like, okay, why is that when the whole rest of the world seems to be in tough shape? The correlation, my take is the correlation. Nothing is up forever, nothing is down forever. The dollar's had an incredible run. These other equities or currencies, they're not going to go to zero. They're consolidating out, but the euro right now, when the euro went topside on that December 3rd area, that's a big number. It's going to have to build cause for higher price, but I suspect that's exactly what we'll get. You stay right there, folks. You're going to be coming right back. Dow up 71. NASDAQ is flat. S&Ps are up 6.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Miracles happen to those who believe in them. Market-wise, let's take a look at it out here. We had the Dow Industrials up 52, NASDAQ down 5, S&Ps up 2.5, gold contract down $2.80, trading at $1,095 an ounce. Would you have a gold as this, folks? Had some nice strength last week. Thursday, Friday goes topside with volume, sideways today with light volume. That gold contract wants to run up into the 1150 to 1194 area. Silver down 5 cents, $13.86. Silver has a problem, folks. We got to get silver back inside the $14 area. And I heard I met Mr. Larry Pesavento this morning at the 9 o'clock hour TFNN. He was talking about that, yes, silver has to get a kick in order for gold to move, and there's no doubt about it. Silver contract continues to stay under the $14 area. That has to get above 14. Why? Because that's the larger trading range. Platinum down 34 bucks at $8.46 an ounce. Copper got toasted, roasted, got under the $2 level, down 4.5, almost 5 cents today, 197.40. Oil continues lower. Oil's in an ABC structure on the way down. Down $2 today, $31.14. Now, the ABC structure down, the price projection, is approximately $28.25. Remember something about an ABC structure on the way down and way up. That is a 1-to-1 structure that I'm giving you that price projection. You can go to a 1 to 1.382 or 1 to 150 or a 1 to 1.618. They're just different expansions of 1 as a Fibonacci ratio. We'll see where that shakes out. But oil continues to have a tough time, and as it keeps getting to lower price, of course, the acceleration does get faster on the way down. Bonds, the 10-year down 6 ticks, 127.07. 30-year down 29, almost a full point, 155.15. Bonds, with bond market head down as this. Bonds spiked last Friday and had volume behind the move as they got higher. Got higher at about 5:30 to 6:30 Eastern Standard Time this morning. They spiked higher, then gave it up on price. Come off that with a little juice. Bonds want lower price. The amazing part about bonds wanting lower price, of course, is that you're talking about a market that has been down big numbers and money's not going into the bond market. That's telling me that more than likely we've seen bonds top. Now, if that's the case, bonds have been in a bull market, folks, since 1981. It's just amazing. The 30-year today was right next to where its all-time high was. It couldn't make it up to that high, but it was laying right next to it. King dollar up 316 ticks at 98.91. King dollar's in a consolidation. We'll see how it handles the top of the consolidation. When it went to the top of the consolidation last Thursday, couldn't handle price, gave it up on volume, gave it up on price. To me, it looks like King dollar is going to make its way back down to the $95 area. Euro is trading at 108. The yen is at 117.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so the SPY gets to 189.82 today. It does 184 million shares. It rejects that lower price. It has lighter volume. It was going into the sign of strength from the last bounce, which was October 2nd. That had 211 million, so you got under that price. We got into that price. We didn't get under it. The low is 189.82. That low there is 189.12. We got into it, we rejected it. Right now, you're at 192.11. Bottom line, I expect what you're going to see. You're going to see a bounce somewhere into the aspect of the 199.95 number up to the 202.18 number. The numbers I'm giving you right there, folks. The first one was the low of December 14th. The second one is the low of November 16th. The reason for those is that what markets like to do when they bounce, they'll go up to the last time they were down. That's where we went down. That's where it bounced. There's going to be some resistance that's laying out there. And what I expect you're going to see on that bounce is you're going to see lighter volume. And we'll stay with this for a second because this is going to, if in fact that's what you get, you are talking a very large ABC up because the 8 point on this is 207.79. Your B is the low of today, which is the 189. So you're talking about an 8-point A to B. So let's picture you get the 8-point A to B on the way down. You bounce up into the 202. What that's going to set up, that's going to set up a 195 level, right? Let's say 202. Yeah, that sets up, no, 20, okay. 8 point is 207. B is 189. Okay, 207, 189. You're talking about 18 points. Then you get 18 off of the 202. So you're talking about 182, 185. And 185, yeah, that's how that's set up. 185 sets you into the swing low generated out here on the September 29th. And then, of course, it sets you into the August 24th area. That August 24th area, folks, is game to get tested. That's a high-volume swing low. The bizarre part about this August 24th area is this, is that if you were in front of a computer that day, you know that the S&P actually had trades from $197 to $182. The ones, however, at 182 and those lower prices, like they were like in a split second and there were hardly any trades that came off. That being said, what has happened is that there are plenty of equities that have gone down to that level right now, tested that level, and broke that level. That brings your probability higher. That guess what? That's where we're going to go. We're going to go test that lower area. We go take a look at the 3 Qs. What you have with the 3 Qs, ABC structure on the 3 Qs is smaller. The reason that's smaller is that the 3 Qs had gapped away on the 4th of January. So you really take the top of that gap. The top of that gap is 111.84. The low today is 102. So you're talking about 9 points, 9 off where this could bounce into, get you down to the 100 mark. Yeah, that's the way that's set up right now. The 100 mark is the swing low that was generated out here on the 29th of September. Bottom line is that you can expect this volatility to continue to be in spades, and I expect you're going to see that all over the world. Last night in China got toasted and roasted again last night, so it's pretty amazing that our markets could get any breathing room. This is Tom O'Brien, this is TFNN. You stay right there, folks, and we'll be coming right back. Dow Industrials closed up 52 after rejecting lower price. NASDAQ was down 5. S&P's also rejected lower price, closed up 3.5 at 1914. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And unfortunately, David Bowie passed away this morning, folks, after 18 months with cancer. He was 69. Now, the amazing part, he was an amazing musician, period, and producer. What he also did, though, he changed how Wall Street pushes out securities. He was the first guy, the man, I'll read this Bloomberg article. The man who stole the world was the first recording artist to go to Wall Street and tap future earnings of his music, paving the way for a thriving market and securities backed by everything from racehorse stud rights to commercial washing machines. Let's see. So, David Bowie, he died of cancer at age 69 on Sunday, sold $55 million of bonds in 1997. That were tied to the future royalties from his hits, including Ziggy Stardust, Space Oddity, and Changes. Following his examples were singers James Brown, Rod Stewart, and heavy metal band Iron Maiden. Securities backed by royalties allowed artists to raise money without selling the rights to their work or waiting years for payments to trickle in. Bowie's bonds were as groundbreaking as his music, said Robert Ford, a London-based money manager at 24 Asset Management, which oversees £5.5 billion. So check this out. The so-called Bowie bonds were sold privately to Prudential Insurance Company of America. The securities were initially rated A3 by Moody's, the 7th highest investment grade rank. In the 2000, internet privacy led to a drop in sales, and Moody's cut the rating to 2004 to BAA, one level above junk. The decline in worldwide recorded music revenue slowed in 2014 as more people subscribed to the streaming online services. The Bowie bonds were paid off after 10 years, and the ratings withdrawn. Bottom line, nice way to do it, though. Let's go to, bottom line, what happened there, of course, is that he could sell the bonds, he could reap the money without selling his music rights away, live or invest that money. Bottom line, did it for, did it for 10 years and then paid it back. Let's go to Rob in L.A. Hey, Rob, what's going on? You there, Rob?
Yes.
How you doing, man?
Pretty good.
Okay, so you want to look at SBGL?
Yes.
Let's take a look at it. Okay, so this is a gold mining company in South Africa. The low for the year is 407. The high is 1156. Now, do you own this? You're looking to buy it? What are we doing here?
Actually, I went along today. I bought some calls, the July 7.5 calls.
Okay. Now, did you buy these calls because you read that story in the Wall Street Journal about this stock with DRD Gold?
No, I didn't. Actually, I didn't know any news.
Okay. Okay, so let's take a look at this. Okay, there was a story today, folks, and this is pretty cool. There was a story today in the New York Times, or the Journal, one or the other. I forget which one it is. And what it's about is this, is that this company here in DRD Gold, what they've done is this, is that so picture this. In South Africa, folks, okay, South Africa has the most amount of sludge from digging gold for hundreds of years. So when you basically dig gold, you put it in the refinery. After you get the refinery, you get all the sludge that's left. What has happened is this. The sludge that's left is that per ton of dirt, you get 0.2 of 1 ounce out of that sludge. Well, what has happened is because the rand dollar, so let's go back over here and I'll show you something. The rand dollar this morning hit 17.83. This was amazing. I'm in front of my computer this morning. This is like 6:30 or something. And the rand dollar goes from a price point of 16.35 to 17.91. Now, what that means is this. It means 17.91 rand dollars equals 1 US dollar. This has gone from 6.5 rand dollars up to these levels. So what that does is that takes the South African companies that have to pay their employees. In this case, this company here has 44,000 employees. They get paid in rand dollars. They get paid for gold in US dollars. So you can see their expenses have gone down dramatically. So what has happened is this, is that sludge now that's been laying around all of Johannesburg is huge. So they're taking these huge hoses and they hit the dirt with the hose. They've built 4 miles of underground pipes that sift through, so you hit the dirt turns into basically mud, it goes through the pipes. As it goes through the pipes, each ton, they're getting 0.2 of an ounce of gold. Bottom line, when you cut to the chase, because of the rand dollar versus the US dollar, they're making big dollars on selling gold, putting the gold together because it's worth it because their expenses are so minimal. Okay, so now let's go back to SBGL. So, tell me what strike price you get in what month?
The July 7.5.
Okay, that's great. So you're out there. How much did you pay for it? You must have paid up for that.
Yeah, 80 cents.
7.5. Okay, so that means it has to go to $8.30 by the 3rd week in July, folks. That's a good bet. That's not a bad bet. You know, this has been consolidating between $11.50 down to $4. Let me pull this back a little.
Yeah, it doesn't seem to be trading for a long time, like only...
This company here, I believe that this company here, okay, let me get this straight. Did they buy? This company here was a spin-off. We owned this at one point. This is a spin-off of Goldfields. This Goldfields spun this company off. That's how this came into fruition. So when Goldfields decided to spin off their South African old mines, they spun it off to this company. If you had owned Goldfields at that point, you end up owning this simultaneously. That's how this got done. Because I remember when this got done. It's like 6-7 years ago now, I think. So, you know, you're going to need a little juice here, but you gave yourself some time, man. You know, that's how this is shaking out. And I think the downside, you're at 675. The downside is only probably about 596. You know, you want a couple more signs of strength, but that's how this is set up. But the business plan, you know, the business plan inside these companies is good. You know, I mean, this company takes in $25 billion a year, man. Billion in rand, that is. That's in rand, not in U.S. dollars. Okay.
Do you see the rand getting weaker, more weaker?
You know, it's pretty tough for the rand to get weaker than it has. It doesn't have to. If the rand, you know, it's $16.8 right now. What rand dollar to 1 US dollar? As long as if the rand stays at, you know, even down to $12 or $14, these companies are still going to make a fortune.
Oh, okay.
Yeah, I mean, it's big money. When gold was at a high, yeah, just stay with us, okay?
Okay, thanks.
Stay right there. Rob and I come right back, folks. Our phone number is 877-927-6648. Stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials closed up 52, NASDAQ down 5, S&P's up 3. We're talking with Rob from LA, and we're talking about SBGL. Now, this is a South African miner, gold miner. And, folks, if you do want to test drive the Gold Report, you can do that 1 month, absolutely free. Just go to our website at TFNN, go to newsletters, go to investments newsletters. You can test drive it right here, right now for a month. You know, so we're taking a look at this. The way that this company, of course, makes money, we explained, you know, their miners. The rand correlation, however, to the U.S. dollar is absolutely crucial. Why? Because you can see they have 44,000 employees. The employees get paid in rand dollars. The company gets paid in U.S. dollars. And the way it works in South Africa is that they have to take the U.S. dollars and transfer it back into rand dollars, I believe, within 90 days. You know, so to answer your question, Rob, about going higher, you know, meaning at higher price, folks, that means the rand gets even weaker. It's at all-time weakness right now as far as I could bring it back. I was looking at this morning. Now, it certainly can. The key to wrap your head around is this, is that it doesn't have to in order for these South Africans to make big money. I'm going to give the CEO of Harmony Gold an email tomorrow morning and see if we can get him on. The reason being is that when we were talking with him, you know, many times, he was explaining that, hey, listen, the rand dollar at 12, 10 to 12, these companies can make a fortune. Never mind at 16, you know. So
Oh, yeah, Harmony. I have Harmony as well, like from a month ago.
Yeah, Harmony making a fortune on. Harmony Gold, folks, we own Harmony Gold. This is a rocket ship. You know, Harmony Gold went from 59 cents up to $1.46. Right now you're at 129. And that's all about, there's no doubt it's all about the aspect of Rand dollar versus US dollar. And something you want to remember is that with Harmony Gold, with Goldfields, with SBGL, these are companies that mine millions of ounces of gold, not hundreds of thousands of ounces. Now, the gold that they mine is very expensive. You know, now watch this. Here, I'll show you this, folks. This is like crazy. They're making more money than they did. Well, we'll find out because the earnings will be coming out. But they should be making more money than they did when gold was at its highs. And I'm going to show you something with Canada, too. So watch this. So when we take a look at the correlation of where we are in gold right now, I'm going to bring this back 15 years. So first, I'm going to do it in South African terms. So this is just amazing, folks. And you know, it's amazing. So in South African terms, gold right now is at 18,756 Rand dollar. 18,756 Rand dollar. Well, at the highs, folks, of 2011, it was only at 14,700. So they're not only making more money, they're making dramatically more money. Now watch this. Now this is a kicker, because this is really cool because we have so many folks that listen in Canada too. The Canadian ones, if you're in the metals market, you want to keep your eye on these Canadian companies, and this is why. Now watch this when I change this. When I change this, I'm going to bring this down to the Canadian dollar. The Canadian dollar, in Canadian terms, the gold market today, that's good, it's closed right now, is at 1556 Canadian dollars. 1556, right? Well, at the highs, the low of the high of 2011 is 1586. The high is 1902. So in that correlation, you can see that if you are a Canadian miner, how much money you can actually bring to the bottom line. You know, so you want to be able to bisect and dissect that. I do it technically, and then fundamentally, you want to wrap your head around that because it makes a big difference, man.
So you actually better to buy those Canadian, not the U.S. miners, right? Everything's in the dollar, right, Tom?
Well, as long as the U.S. miners thinking that gold's going higher, the correlation is easy to do. What I really dig is this, is that the correlation of, and I'll do this, let's see, I might be able to do this quickly at the next break for everyone. What happens is that when you actually do the numbers, the actual figures, and you see how much more money they make, it's high, it's unbelievable. It's really unbelievable. And the Canadian dollar, the same thing is happening. You know, like if we go over to Goldcorp, right? You know, Goldcorp's been a mess. You know, Goldcorp is at $11.81. And it's like, man, this thing can't get off, you know, the lows. Now, what did happen last Thursday, it got a sign of strength. And I started looking at this last night when I was doing the gold report, and I says, you know what, man? What's going to happen here is that because of the price of the Canadian dollar, these guys should start putting some juice into the bottom line. They've made a couple huge mistakes, you know, buying companies Goldcorp has at inexpensive gold. But their big mine is in Canada at Red Lake. You know, so Red Lake should be pushing out some real numbers for them, man. So if you're a fundamentalist, you want to do some more work on those Canadian companies, because thus far most of this is under the radar, folks, because the commodities themselves have got killed so bad. Because what it comes down to, you know, great, we love doing technicals, but the bottom line is that these companies either make money or don't make money. You make money, guess what? Price, it's going higher. You don't make money, it's going lower. Cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe one. Let's go to Mike in New Hampshire. Hey, Mike, what's going on? You there, Mike?
Hey, Tom.
How you doing, man?
I'm doing terrific. The last time you and I spoke was 2012. And we talked, don't you remember? And we talked about Greenbrier companies.
Okay.
GBX. And it was around 16. You said, it's going to go maybe to 13, 14. I bought it.
Okay.
And I sold it in the 50s. It went as high as 66.
Yeah.
Now it's come back down into the low 20s. And actually, I just bought some today. And the earnings on Friday they crushed them, but the stock got killed. So I'm wondering what you see on the charts that would make it either go lower or higher.
Okay, so we're at $24. Let me just see this. Okay, so let's see. They supply transportation equipment services to the railroad and related industries, right? Okay, they refurbish cars. That's what it looks like, right? Is that what they do?
That's right.
Okay.
And they make them as well.
And they make them and refurbish them. Okay. So if we put this on a monthly, yeah, there it is right there. I probably gave you the exact same price right there. Yeah. If you take a look at December of 2012, but you said you called in 2011, right? Interesting. Okay.
Yeah, it was, I think, in November.
Yeah, no, okay, so you have two spikes. You have December of 2012, the high of that is 21, the low is 1541. And then you have August of 2011. This is pretty intense, man. So this is where they're coming back to is 20.66. Just hang there for a second. You got to be careful, though, man, because this wants to go base into those places right there. Just stay right there. We're coming right back. Our phone number is 877-927-6648. You stay right there, folks. We'll come right back. Dow is up 52. NASDAQ down 5. S&P's up 1. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We're talking with Mike from New Hampshire. We're talking about GBX, which is Greenbrier Companies. Mike, have you ever traded options?
No, I haven't.
Okay. The reason I was asking, and don't do this, but this is pretty cool how this is set up, and this is why. Because what happens, folks, is that when you have, Mike has already owned this, made some really good bread on it. It's coming back to, a price point that he's buying it already. It looks like it wants to go a little bit lower. And what happens with this, now don't do this, I just want to explain how this works, because this is, when you trade options, this is one of the best strategies if you're going to buy the stock anyway. And what happens is this. So the stock's at $24, okay? What happens is that you could sell the March puts at $2. Well, that would mean for every 1,000 shares you want, you would collect $2,000. Now, two different things end up happening there. If it is not at $22.50, you get to keep the $2,000. If it's at $22.50, but you're buying it anyway, you just got subsidized $2, so you're really in at $20.50. Isn't that cool?
Yeah, I understand.
Yeah, and don't do that. I'm just explaining it to you.
No.
It's really a good way, folks. Like, I've done that in the gold market, and it's really a sweet way. If you're going to buy and come in anyway, it's like, okay, you're going to get paid one way or the other. Now, the risk in that, of course, is that it not only goes there, it goes a lot lower. Okay. So, but that area, before you buy any more, I'd let it come down there and see, how it shakes out. Are you watching Tiger TV by any chance?
Right now, yeah, on my computer.
Oh, okay. So, it's archived anyway, but those two areas there, that's where you do not, I can tell you this, you do not want them to break those areas, because there's real buying there, and it's $19.19. That was from November of 2012. December is $21. January's $21. You go right back into August of 2011, that's $20. It should hold that, man. If it doesn't hold that, see, if it came down like it came down last month, it'll break that apart. That's 18 million. No, it wouldn't. No, that was 18 million. What you want to see, you just want to see the volume lighten up this month, but it doesn't look like it's going to, because we're already done 9.3 million.
Well, it did an awful lot on Friday when the earnings came out.
Yeah.
Thursday or Friday.
Right.
And it got crushed by about 10 or 12% in one day.
Yeah, and the railroads in general have got crushed. The transports have been screaming for quite a while that, they're the first indice to break down. If you look at the transports, that, they broke down, I believe, like a couple years ago. Let me see. Yeah, the high in the transports, is November of 2015. And what that has to do with, of course, is that, and Greenbrier's case, it has to do with the railroads got to make money. The railroads have been losing money or not making as much money because they got hit more than once. They got hit because the commodities, the soft commodities have come down, whether it's corn, soybeans, wheat. And then I think the larger aspect probably for the railroads is that the whole fracking business, because oil got crushed, has come down dramatically. Because see, what they had going, folks, in the railroads, which is amazing, they were bringing sand in on a continual basis. They were bringing oil out on a continual basis. You're talking about rail cars that had it both ways, which is very unusual. Most of the time, rail cars themselves, you get a one-way trips, but, the rails are so big that they still make a fortune. So I think that's what you're getting hit with, man.
Okay. So I got to watch that 19, roughly 20 area.
Yes, and you do not, if that penetrates it with volume, just get out of the way, man. Just get out of the way. Because if it penetrates it with volume, it'll go to the bottom of that. And the bottom of that's pretty intense. The bottom's $10. It's you get that area. The way you want to look at that area, Mike, from August, the high volume swing low in August of 2011 is $11.77. You know, so if it doesn't penetrate it, great. You get action, man. You know what I mean?
Okay.
Okay, man. Have a great one. Have a safe one.
You do a great one. You do a great show, Tom. Thanks very
man.
much.
Appreciate it.
Yeah. Bye.
The you know, I know. Let's go take a look at. So what you had is Alcoa. Alcoa kicks us off. Earnings. There's going to be earnings everywhere, and we just kicked it off. So Alcoa closed at $8. This is a dog that has fleas in an extraordinary way, folks. It's trading at $8.14, and they beat by 100%. So this is pretty funny, actually. The estimate was 2 cents. They made 4 cents. Bottom line, doesn't mean a thing, folks. Alcoa is a dog with monster fleas, without any flea shampoo or anything else. This equity looks to me like it's going to try to get into the. Well, we'll see whether it can get out of $8.20. First, it would have to get out of $8.20. You know, that's shaking out. Let's go take a look at Lululemon. Lululemon closed at $54.73. Thanks, Terry. Trading right now at $59.36. And this baby here, let's see what they're saying. Okay, so their forecast, their revenue is up. Their revenue, let's see, fourth quarter revenue, they expect $690 million to $695. The expectation was $679. So bottom line, they're taking in more revenue. Their shares right now are up 6.4%, and they're boosting their forecast. They're putting a full press on, no doubt, because Lululemon this morning, what you did have, that there was an article also in the journal about Lululemon. You know, it's a great clothes maker, but they're very expensive. That's the bottom line. BURL. Let's go take a look at this. Is this Burlington Factories? Let's see. Burlington Stores. Burlington Stores closed at $42.76. This is going to be interesting. This is trading at $46. Let's see what they have to say. Be amazing if these companies have stopped making some money. Sales were up 3.7%. They saw their sales were going to be up 3.7 to 4.8. Their earnings per share, they see 144 to 146. The estimate was 148. So I suspect what you have with Burlington here is that you get the aspect that they didn't get killed as much as the market thought they were going to get killed. The Burlington has just gone from $61 down to the $47 area. So more than likely, we'll see whether that's a dead cat bounce or not. But retailers in general, folks, that is a business I would absolutely not want to be in. What is amazing? If we go over to Simon Property for a second, Simon Property is the largest mall owner in the United States. It's absolutely amazing that Simon Property is actually still at highs. This thing, I'm not shorted, and I'm not going to go short like right now, but it looks to me like malls are in trouble. I mean, when we're talking about that many retail stores that are having a tough time, it just says to me that, hey, guess what? They're eventually going to get hit. Now, the real question is that how long are some of the leases that they have on those larger, high, top-end malls, and will they get paid off? Because retailing's changed. Amazon's changed the whole ball of wax. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, in DraftKings and FanDuel. This is going to be a big deal, folks, so they can keep operating. This just came across the tape. The state of New York was going after them, shutting them down. I believe they both had stopped taking bets in the state of New York. I'm not quite sure about that, but they were trying to shut them down. Bottom line is that they just won in court. They didn't win the case. What they won is that they won the right to keep operating and taking bets until the New York Appeals Court is going to hear this, and they expect that's not going to happen until May. So that's going to be a big number for them, no doubt. Now, when we go over and we take a look at where's the Fed? Here it is. Where's the Fed? What you had out here today is that Dennis Lockhart, which is a Fed governor, he was out here this morning saying that he thought that the volatility inside the marketplace would not hurt the economy. He was looking at the aspect that, hey, listen, the economy, our economy is strong. Volatility in the marketplace, wouldn't hurt that. The amazing thing about, now he went on to say that he thought that he'd watch it another 3 or 4 weeks, and that if it did get like August 24th, then that things could change. What you always want to heads up about, folks, is this: when markets take big hits, the thing that blows my mind about the statement that he said, you hear this all the time, that for some reason bureaucracies, government bureaucracies, they come out with these statements that, hey, it's okay if the markets go down, the economy's not going to get hit. And it's like, I have never seen a market get hit and the economy doesn't take a hit, whether it's 7 or 8 months later, okay? Because what happens is this, is that there's so much money that's in the marketplace that people just feel poorer. Now that being said, there's no doubt that I think we have a strong economy. But it makes a difference. It absolutely makes a difference. You know, I remember the first hit in 1987. The market, so picture this, you had the market crash. And I wasn't even in the market then, okay? I was in the market, but I was in the bankrupt bond market, not in the equity market. So what had happened there is this. The economy didn't get hit until like 9 months later. And 9 months later, the market was already over those price points. It has to do with a confidence deal. It has to do with people selling. It has to do with how much money's in the IRA and all the above. That's what's really wild, you know. So, you know, I suspect he's going to have to. And so his point was that he still saw that interest rates would continue to go higher. You know, so we'll find out. The way that the bond market is actually trading, it's looking like interest rates does want to go higher because the bonds couldn't hold price. You know, if we go take a look at that 30-year, this is a big heads up. This is going to be so wild if, in fact, the highs are in. You know, we'll see where the actual interest rates want to go. But we reached a high today of 157.03. Well, the closing high of the high in bonds is 158.28. That was generated on October 2nd, I think. Yeah, October 2nd. We closed that day at 157.10. The next close was 158.05, and then 157, all within like 3 or 4 days. That was this October 14th through the 16th. So bottom line is that we'll see where this does shake out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. We look forward to speaking right back here tomorrow morning. Remember, right on your cell phone, TFNN.mobi gets your audio. Go get them, folks.